Markets trying to stabilize as better data on China's manufacturing suggests a possible recovery. Investors await earnings before the bell from Under Armour and Apple and Netflix after the close. I'm Brittany and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany with The Street, and together we bring you the morning call. So European woes continue to haunt the market yesterday. Stocks did manage to rally to close halfway off the lows, but still finished negative for the day. How positive was it at least to see them rally as they did?
Well, what it does is it keeps this pattern in check. A lot of people came in yesterday, oh my goodness, we're down 20 handles. This time's going to be different. This time we're going to break this intermediate uptrend that we've been following since the lows in June. And what happened? We opened below, came back above it, rallied even further, took back half the losses, and things are still intact. The question that everyone's saying is, when will this change? And what we're trying to do is figure out clues whether it does. If not, just follow the roadmap and just keep it simple.
Well, speaking of looking for clues, what indices could we watch for clues that we could potentially go lower or clues that we could go higher?
Well, if you first take a look at the SPX, you'll see that yesterday we came right in below this ascending channel. Okay, we've been following this channel. This channel has been great to maneuver. This was the low that was put in May. We came all the way up a little bit. Remember, we showed some commitment here, went to the top end of the range, came back down to support, tested this little trend line, held it, went back to the upper level, failed there, came back to the lower level. And most recently, remember we were talking about 1375, that it would be positive to get above it and stay above it. Well, it really had no traction there, and it couldn't get back to the upper end of the channel. So that's clue number one, that perhaps this time will be different. So right now we did hold the bottom of this channel. We have a new point of reference here at 1337. So I do think that if the market can't take back 1358 to 1360 short term, we could then turn lower and perhaps break yesterday's lows, and that would change the pattern.
Okay, so again, speaking of clues, the Russell and the transports broke their ascending channel. Could that be a clue that the S&P will follow suit?
Yes, because typically, in a healthy market, you want the Russell to lead to the upside, not to the downside. So the Russell actually broke its pattern. So if you look here, you want to see if it continues that way. Here is this little trend line that's been intact since the lows here. It's been following it all the way up, and yesterday we opened below it. Yes, it came off the lows, but didn't reclaim it. So the question is, moving forward, you take a closer look here, what type of action do you have in the Russell? Does it try and rally back up, fill a portion of this gap and get rejected, then turn lower? That'll give us clues that perhaps the S&P could follow that pattern. And then if you look at the IYT, you will see you did have a wedge forming here. Okay, if you look at it from a bigger picture standpoint, it gapped below. So same thing, perhaps maybe it rallies back up and retests this trend line, but if it gets rejected, both those situations can bring more pressure to the S&P and be a leading indicator for the downside action.
Well, lots of earnings on the horizon. Let's start with Google, which already reported earnings on Thursday. It reported decent earnings, showed strength yesterday. So could Google continue to be a leader today if we continue to have a depressed market?
Well, Google, we know the past 2 quarters they missed, and it was battered, bruised, but the stock never really fell apart. I got a lot of people saying to me, oh, this was your high beta name of the year, blah, blah, blah. P.S. if you look overall, it's in line with a lot of other tech stocks that had big moves have done, and now most recently it came out, the report was decent, much better than people would have thought. If you look here at the chart, you will see that, this was the major support that it held going sideways, and then, here's the downtrend that's been in place since, the highs of the year, and we're really not too far off it. For Google, this is a sneeze. This is maybe one more quarter. But as a trader, if you looked at it yesterday, right, yesterday it gapped down, and it held the prior day support. Okay, the low here is 598. So I would say constructive or things to look at. As long as it stays above this area now and goes sideways, this will be in the game to lead. Here's a small trend line that once it starts to get above 618, I think traders will add to it. Then the next real level here is 640. So it is acting well since its earnings, and I do think that the complexion here has changed a bit. So if you're still in it on a macro level, and because we said you can be stopped out at the 200-day. So if you got stopped out at the 200-day, you came back in at that support of like 560. you're in the game, and if you're looking for an entry in Google, I think you could be in tier 1 long here, but wait for a better market later this year for momentum above, some of these downtrend levels.
And BIDU also coming out with a good quarter. The stock traded as high as 115 after hours. Of course, the stock has been weighed down for some time, so could it be time for an oversold bounce?
It's up like $6 right now, a pretty big percentage. So I think we have to just use our intraday tactics here. So we're going to come in, people are going to try and sell it at first. So if they can't sell it down in the first half an hour to 60 minutes, then perhaps you get a good trade for the day. If you look overall at the chart, it has so much to prove. It's coming from 155 all the way down to 107. So it's been technically broken. So for it to repair itself, I would say it's got to open up above this 114, 115, and then hold above it. We have some rules after earnings. What you want to do is you want to see a gap up, let it go sideways a little bit, let it hold the gap underneath it for a while, and then that'll give you a better entry once it proves that it could hold up and buy higher. And then the next real level here doesn't come into about 127. So at this point, I think there might be a trade intraday. I'm not going to just chase it and buy it, but anyone that's been used to shorting this thing, it's been so battered and bruised, don't go back to the well too quickly unless you're trading at a level versus a level.
And all eyes, of course, will be on Apple today, which reports earnings after the close. You typically are long Apple going into earnings with some sort of option strategy. So how will you trade it today?
I think the last 2 quarters I was long in the money calls, and it worked out very well. And over my career, probably 80% of the time I'm doing that. This is one of those times where I'm not really sure they're going to come out and everything's going to be so great where it gaps up 30, 40 points. So I'm going to not take the risk of loss of premium paid, which I do think you could do. My gut tells me that I know I have an iPhone. I know I have an iPad. My wife has an iPad. I have a Mac, and a few things just to talk off the cuff. Okay, first of all, I haven't bought an iPod in 2 years. Okay, because if you have an iPhone and you have an iPad, you don't really need an iPod. So they're cannibalizing that a bit. I also know that by using having my iPhone from 2 iPhones ago, mine's broken. We were just talking about it. Like my case is disheveled, it's all beaten up, the screen could be cracked, but I probably still won't get another iPhone until we said iPhone 5. So maybe some other people are thinking the same thing. You know what? I'm not going to get an iPhone now if I can get one in September and get the newest one. So the Warren Buffett mentality saying, oh, maybe that's use that as a thesis. So P.S. it could be a little light. People are looking for the iPad to actually be impressive, which it could be. So overall, I don't think it's going to be a go nuts quarter. I think the next quarter will be better, and obviously the fourth quarter. So at this point, if you look at the levels here, if they do come out and they're strong and they don't to conservatively guide too much, because that's what Apple does, I'd be a buyer after hours, not before the report, around 620. If you can get above 620, stay above 620, you then have, 644, and that's the highs. If for some reason they are a little light and the gross margins that there's a whisper that they're going to be better aren't better, you could see it move lower. I think this would be too quick to be buying it after hours around 580. That's the 50-day. I think more in the 560, 565 area, once it slows down, if it does get hit, this would be an area to look to nibble as a trader. You could either do it after hours or wait till the following day, which is always a good trade the day after Apple earnings. And then major support comes in here down at 528, and then you have the 200-day at 509. So at this particular point, if it's good and it gaps up and holds it, I'm a buyer above 620. Then you could see 644. If it's a little bit lukewarm and they want to hit it after hours, I think for macro investors, it'll be a gift. You could buy it lower, and even as a trader, it might be a good swing entry.
And Netflix also reports today after the close. Some out there anticipating a positive surprise. What are the key levels you'll be watching?
This one had a nice move above that 70.50 for a trade, but this has just been a trading vehicle all year. Ever since it changed composure and broke that uptrend at 300, 270, 220, it was a great short. And then earlier in the year, it was a bit more of a methodical long. Right now, I think it's somewhat of a neutral. But if you look here at the chart, you did get some people participating with some volume as it broke above this 70.50, and it's kind of hanging on to this upper channel by a thread. So some shorts are still trapped, some money still betting on it. If they do beat and guidance is okay, above this 86.65, you will get a squeeze, because look what you have here. You have 90, and then there's a big gap. So if this thing gets going and they start squeezing, there's no reason this gap can't get filled back to 100. But if you take it long, equity-wise, I don't think you get bailed out the way you can get bailed out with Apple. If you go long Apple into the numbers, I think with time, it's going to be higher. Stock highs, the all-time highs are not in an Apple, but I don't know. I'm pretty sure the all-time highs are in Netflix, and I don't think it gets back to the year highs of 130. So if you want to play it, I would do it with some kind of option, maybe some, call spread, or just, I can go into that on the site. But as an investment, if you're looking to just buy Netflix because you think it's going to be a great quarter, you better know your risk.
Now, what about Amazon? Amazon reports earnings on Thursday. How will you be trading heading into earnings?
This one I definitely won't be long into earnings. Last quarter they came out and surprisingly was to the upside. The 2 quarters before they missed. So this is like a coin flip. My Buffett side of me says I don't see anyone really with the fire. I don't see a lot of Kindles anymore. I think that everyone can order things online. You can go to Target.com, Walmart.com, you name it. So I think their business model is okay, but they have a lot of competition. I know their PE is really, really high, so it has to be a good report in order to go. They've been getting free passes all those bad quarters because they're opening the call centers and they're hiring people, getting ready for future business. Let's hope that future business is coming in. Take a look at the chart. I will trade this after hours as well. No reason for me to take the risk, but because if you look at this chart, we have some defined levels. Okay, here is defined resistance. After earnings, if you could actually get it and it trades above 230, or even what's this, 232, you then have freedom up to the highs, almost similar to Apple. Okay, up to what this peak here is at, what is that, 246. So I think for this one, it's better to trade it after hours. Here's your level 232. There's that high here. If they miss, I don't know if they're going to get a pass the way they did, a few quarters ago. I'm not going to get into it. And then no, if they do miss, here's your big support. This was the low end of that earnings gap the last time coming into the 200-day, which is around 205. And this little area right here is 206. So 205, 206 should be really big support. And there's your resistance. And I think guys, or short-term traders would rather be involved after the report. And as an investor, I would just be a little wary here. If you've been in it for a long time, rightly so, you're up a lot of money. I would just maybe sell some in-the-money calls. So this way, if you're protected to the strike, you can keep the premium, you can get some extra money, or do a collar where you sell some calls, you buy some puts, you finance it. So this way, if you do get the downside, you have puts to help protect yourself as well.
All right, well, coming up, we're going to go in the trenches with stocks that helped lead the market off its lows yesterday. But first, a quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and talking stocks that helped lead the market off its lows yesterday. Stocks that went green closed best. The stocks that went green first closed best yesterday. So home builders are looking very strong. Toll Brothers reaching new highs. Where's resistance and support right here?
This is a group that gives the bulls some conviction that we can continue, that we're going to stay intact, because why would they let some of these home builders continue to make new highs? And one of the tactics when you have a huge gap down in a sea of red, you look for things to go green first. And if they go green first and the market then bounces, these are the ones that create alpha, give you cash flow. If you look at the stock here at Toll Brothers, you will see it's at highs here. So if you bought it in the hole yesterday, you made money, and then once it went above the previous day's high of 30.82, you also could have added. So at this point, investors are still getting paid for being Toll Brothers. People don't want to be long, people don't want to be involved, but overall, above every key moving average, I don't see any faulty signs yet.
On the flip side, as a whole, banks not looking so great, but JP Morgan managed to rally from negative to positive yesterday, erasing overnight losses. So can it break through resistance?
At this point, I still think that this stock can be bought on extreme weakness. No need to pay up in any of these banks. It was just funny that last week the banks were the weakest, and then when we gapped down, it was the first thing that traders probably went to short yesterday, and they wound up going positive just for a trade. If you look real quickly at the chart here, it's still in this lower range. This actually broke below this small uptrend and this wedge that we've been talking about, but it did close, near its highs. So I would say, resistance-wise, you have levels right here coming into, what is this, about 35.23. I wouldn't be in a race to buy it, but I do think, you now have a new point of reference in yesterday, and at some point, I guess in a better type market, above this 35.50. It could get going, and then at some point this year it can get into this gap. But for now, if you're in Tier 1 JP Morgan in this mess of a lower channel here, I would just stay Tier 1, and if you're trading it, make sure not to pay up, because every time you pay up, you get disappointed.
And SNDK reported a great quarter at the end of last week. The effects rolled into this week, so can it keep riding the momentum?
Well, this is something I think is important, because these former leaders have been battered and bruised. They give you a new way to get entries, and people are saying, what do we do with BIDU today? This is something obviously different side to the whole spiel, but I want to show you something here. If you look at the chart of SanDisk, you will see that it came out with earnings, okay, and gapped up. It gapped up, no follow through on gap up day. It actually closed in the lows from where it was at. And then yesterday it opened lower, reversed higher. So now you still have this nice earnings gap. That means there's still some pent up momentum in here. So at this particular point, let it go sideways, let it hang out, let it build a new level here, let it build some trust and commitment, and then your entry could be Tier 1 versus this low, and then as a trade, once it gets above the 40-45 and takes back the 200-day, then perhaps you see some follow through. So let this go sideways and use this as your vehicle to trade.
And Halliburton fought its way higher yesterday to rally positive, close the day up 2.4%. Can the bounce continue?
Some of these stocks in this group have changed composure. The first two quarters. First quarter, it was I would say, what's the good word? A slow, sluggish grind higher in the OIHs, and then they became a laggard group. And these stocks have been battered and bruised. And then recently, they just had a bit of a spirited move off the lows. If you look here at the stock, you will see that it actually broke, or it's trying to break this this little downtrend right here. Oops, let me get off of this. It came off this the lows. This was the first time it broke this lower pivot. Actually came below it, opened above it, closed strong, showing you some commitment. Because if you look where Halliburton came from, it's really been battered and bruised. It's been a laggard. So if you're looking for a re-entry, this is giving you some re-entry signs. So at this point, I would say you could stay long Halliburton versus these lows. And next real resistance doesn't come to about 33.60. So we shall see.
And we have to mention eBay acting like a leader at highs right now. What are the key levels to know?
This is another type of gap play after earnings, so I want to kind of just connect the dots for all of them. Connect the dots from BIDU, where you're not rushing into it today, to where SanDisk gapped up and is going sideways for a new entry. Because if you remember, 2 quarters ago, not this one, eBay had a big gap up, and look how long it took to have some follow through. So if you go to the chart of eBay, you will see here, last quarter, it gapped up right there. And then what did it do for almost, 2 months? It went sideways, 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 sideways. Did I say sideways, Brittany?
You did.
It did go sideways. Okay, and then finally you had this trade right here where you got to new highs, and then look what it did. It bled all the way down. And now it had another good report, gapped up, and it's trying to hold this earnings gap. So, instead of pulling your hair out, just realize that, you had to play the ranges here and just look for trades or be just small as an investment. Same way here now, you now have a gap up. Yesterday was a great trade for traders who said, you know what, eBay already reported, it's been upgraded, buy the dip here. It was a good trade. Now I can still think it's going to go sideways. I don't think you're in a rush to pay highs in this, especially in this market. And it could do another range, just like it ranged here for a long period of time. So at this point, if you want it to be Tier 1 long eBay, if you're not in there now, be long versus this low here, or versus, just say halfway into this gap. And then at some point, if the market gets better coming into the fall, it starts to get above this high here of 45.48, you can get some momentum. But for right now, don't chase any strength and let these earnings gaps, pan out.
All right, let's do some quick hits. Goldman Sachs closed the day down yesterday after 5 days of selling. If we don't get a bounce soon, will we see it break support?
I think that this stock has a destiny below 90.60, only a matter of time. If it breaks 90.60 in the next few weeks, or if the market takes another downturn, you better be on that short.
And MasterCard, we're seeing it break its immediate uptrend. What's your strategy for this stock ahead of earnings? It reports August 1st.
I think this is, if you're a macro investor, make sure you're only in Tier 1. It was downgraded like 3-4 times, and then all of a sudden had that news gapped up. If you look at the chart here, though, technicals seem to be weakening a bit. It's been a major runner or mover for investors since the IPO. You did break this small trend. It's now below the 50-day. I would be just light here. You had this outside reversal on that news. This was a sell signal. When it broke to highs, couldn't hold it. Here's your follow through. Now you're at the bottom. If you're long at short term, maybe trade versus yesterday's low. But if it can't take back this trend line, if it can't get back above 420 or maybe even 427, I think some intermediate traders are going to be looking to short it. And again, if you look here at the monthly chart, it's just been an unbelievable mover, but it's showing a few little faulty signals up here, so take a little bit more care.
And what's your insight on Under Armour? Reports earnings before the open. Stock has come under pressure as of late.
You know, is it him? Look, I guess we'll have to look. I'll go on the radio and talk about it depending on the earnings. I know the stock started to show some technical failure once it did that push-through failure, but then after some weakness, it's held support. I'm not exactly sure what they're looking for. If you take a look at the chart, though, you will see some levels to trade against. Here's when you had that small red dog reversal up here. Then this channel broke to the downside, and then it found support right by the 200-day. So it's had to move off these lows. So it's not priced for a horrendous report, but it's also not at the highs where there's crazy whisper numbers that it's going to beat out everything. To me, I think that we had a just theoretically, we had a very warm winter. You know, Under Armour is known for, cold weather gear clothes. I do wear it, but I think Lulu took some of their lunch, whatever. I think that growth here is going to be hard to be sustained, so just be careful if you're an investor in Under Armour. I would just, trade it.
Chipotle still not done tanking. Looks like a falling knife still. Will we get a bounce soon?
Well, this stock, people want to know, like, when the music's over, how do you know? And in off the charts, I chest beat every now and then, but anyway, we've talked about the technical weakness that's been adding up in Chipotle since the highs. Okay, and when you have a momentum leader, when you have a high beta name that is so coveted, but once that pickle jar opens and it breaks, they just start rolling out. Well, you had Netflix, you've had GMCR, you've had a few of them, and this was one of the ones we talked about earlier this year. And if you look at the chart, what signals could you have seen? Well, look at this uptrend right here that got breached and violated. It broke it here, retested, went sideways, and I remember tweeting this day when it got crushed, and people are like, what's going on here? It must be corn prices, it must be this, must be that. I'm like, you know what? You probably got to get out and ask questions later. Then it came further down, grinded its way up, and for us as traders, this is why I don't take excessive risk into earnings. Because look, this closed really strong, so people were expecting that it would be okay, and then pow, annihilated. As an investor, you should have been out of a decent amount on this technical weakness or this broken pattern here. As a trader, you probably didn't take it into it, so now it's not really your problem. So if you take a look here now, where it is, at this point, is not much to do with it. There will be guys that trade it back and forth a little bit, but at this point, you have a huge pro gap here, from here to there. If over the next month or so, it does not even get into this gap will control to the downside. And if you go to your weekly chart on this stock, you will see it's come into some big support. I know I'm spending a lot of time here, but I know, it is what it is. Listen to me if you're tuning in. This stock at some point could be at least down to this level. You've seen many trends break. If you want to go with the more macro trend here too, that comes in right there. So besides this accelerated trend line and then this one, you have more of a macro. So as a short, you just got paid a lot, so you might want to cover a little bit. But again, if it can't take back this level here or a third of this bar, you're going to see continuation to the downside. I just threw
a long hit into the quick hits. But finally, real quick, ags have been looking good. Monsanto acting well. Is this the ag to keep on your radar?
Yes, I think Monsanto, CF, and AGU have been leaders, so I'm going to just quicken it up right there.
There you go. All right, so of course, Apple, after the close today, what's your main focus heading into trading today?
I think as far as the spiders, I want to see if we get into yesterday's gap. After we've had a few of these trend line holds, we've had some follow through pretty quickly within the next day or so. So I want to see if we don't get a move into the gap in the spiders. So I'll go real quickly here. I think this could give us some clues that we might see some more downside action. So if you look here on the spiders, I would say 135, what was the high here yesterday? 130, no, it really wasn't 136.39. I would say if the spiders can't reclaim this 136 area within the next few sessions, I do think that then we finally have a chance to break to the downside. If you look when we held this time, powerful day. We held this day, you had a huge gap up. Every time we've held this trend line, we've powered off of it. So I want to see what type of move we have off this trend line. If it's not powerful, maybe we see a bit of a complexion change, and you could short that rally for then continuation to the downside, because if you've been pressing here, you've been very, very frustrated. So maybe you get a sell signal, then you get a press. Okay, and that's what I'm looking at.
All right, thanks so much, Scott. Happy trading, everyone. Have a great Tuesday.